accountable is a standard in real-time financial verification for both assets and liabilities that can be proved privately. And of course, we are targeting mainly institutions here because it's for sophisticated actors, let's say, to prove their balance sheet, to prove their strategies, but at the same time retain their IP fully with them. And this is the prerequisite basically for any reporting tool that will matter. You cannot expect that a bank will or a trading shop will maybe leak their strategy somewhere and the whole world could know about it. So that's the baseline of what we do. We let institutions to prove what they are doing off-chain and on-chain in real time and preserving their secret sauce.
Welcome to the Edge Podcast. I'm DeFi Dad here with Nomadic. Today's show features Accountable, a new layer in DeFi infrastructure for real-time financial verification.
So we've just wrapped the podcast with Accountable, and I've been sort of sitting here for a few minutes kind of ruminating on the discussion. And one of the things that just popped up into my mind, we didn't talk about this on the podcast, but this whole problem that Accountable's tackling takes me back to the 3 Arrows Capital blow up. And if you're around at that time or paying attention, some of the emails back and forth between 3AC and the creditors that were shot back and forth were just absurd. It was like creditors checking in with 3AC during the meltdown and saying, hey, are you good? Do you got reserves? Are you okay? Are you solvent? And, just 3AC firing back like, yeah, we're fine. I'm paraphrasing, but the level of detail in those emails was laughable. And there's always this idea that, okay, somebody trading billions of dollars must be a financially savvy, reputable player. But I think what we've all learned is that's, you can't make those assumptions ever. You can't just attach on legitimacy just because somebody's trading in large amounts of money and value. So what this all gets to is just the need for something like Accountable.
Yeah, and I think we often like to frame up DeFi as being so much better than that poor standard you described with creditors just asking for verification and email and getting like some single line email from 3AC that they were solvent. The current state of this problem has grown to what we often refer to as yield-bearing stablecoins. We have a standard in the industry where we are often lending money to tokenized hedge funds on-chain. Some of those are presented to us as DeFi protocols, but what's happening is we're lending money and then they're running a complicated strategy, and that strategy is at risk of losing your principal. What's needed is better real-time verification of where that money is being used, the reserves backing certain stable coins or certain yields, what happens when that money travels off-chain. And we saw all of this in the blow-up with Stream Finance. So we were excited to cover this team Accountable because what they are building with this data verification network is addressing head-on all of the issues that we've talked about here.
I think a good mental model for Accountable is to not assume that it's some sort of immunity that you're given if you're using it. Yeah, sure, you're tracking all the data and you're super transparent, but that doesn't mean the protocol still can't blow up. It's very similar to audits. Audits are, they're even more than good to haves. They're mandatory. You need to have audits, but it doesn't prevent you from, an exploit or some sort of event happening. So I think that's the same way I think about Accountable. It's a massive leap in the right direction.
So before we get started, just a quick reminder, you can subscribe at the-edge.xyz. That's the best place to subscribe to the Edge newsletter and to get real-time notifications for the Edge podcast anytime we release a new episode. You can also check out our link tree at edge_pod. That's the best place to subscribe to the Edge podcast on Spotify, Apple Podcasts, or YouTube. And then one last shout out to all of our sponsors that make the Edge podcast and the Edge newsletter possible. Sponsors like TOROS Finance and REDSTONE. Otherwise, we hope you enjoy the episode. Grow wealth exponentially. With TOROS leveraged tokens, when the market moves in your favor, your gains become parabolic. They're built to ride trends, auto-compounding profits. With TOROS, it's simple. Pick a vault, deposit, and your exposure is multiplied, maintained, and protected automatically against liquidations. TOROS reduces risk and keeps you in the market, ready for the rebound. When markets dip, the vaults auto-adjust, softening losses and preserving your position. Just pick a token to multiply your returns. TOROS Finance, exponential gains with leveraged tokens. To learn more, go to toros.finance. REDSTONE is building the Oracle backbone to unlock real-world finance on-chain and next-gen DeFi. With modular gas-efficient feeds across over 110 chains, trusted by 170 clients, supporting over 1,300 assets, from value-accruing stablecoins, liquid staking and restaking tokens, to treasuries, private credit, and commodity tokens, REDSTONE delivers accurate real-time data where it matters most. The biggest platforms and protocols in DeFi today choose REDSTONE oracles, such as Athena, Securitize, BlackRock Biddle, Pendle, Spark, and Maple Finance. If you're building the future of finance on-chain, you need REDSTONE's leading modular blockchain oracle layer. To learn more, go to redstone.finance, and thanks to REDSTONE for supporting us here at the Edge Podcast and Edge Newsletter. Banks use your money to line the pockets of shareholders. Meanwhile, Solstice uses the same yield strategies to line your pockets. Introducing Yield Vault, Solana's best yield. A live delta neutral strategy with positive returns month over month for 3 years. Built for internet capital markets and powered by the stablecoin USX. To learn more, go to solstice.finance. Neutral is the next generation of crypto-native yield. Their synthetic dollar NUSD taps into OTC arbitrage, funding rate inefficiencies, and delta-neutral strategies to deliver premium, stable returns without taking market direction risk. Neutral is now officially live to mint NUSD and start earning neutral points. Learn more at neutral.fi. All right, let's introduce the co-founders of Accountable, Wojtek and Ioan. Guys, welcome to the Edge Podcast. How are you doing?
All great. Thank you for the invitation. It's a pleasure to be here for both of us.
Wojtek, why don't we start with your background first? Talk to us about, what you've been working on over the years and what's led to ultimately building Accountable.
So the story sounds maybe a bit fake for many because it's too perfect in a sense, like why you're building something, because I actually learned the issues that the space can bring to people. So I started in crypto on a retail level, let's put it this way, in 2017, early 2017. So I experienced the ICO boom and bust, experienced mainly the bust in the end. So I really promised to myself that I want to become a professional. And the next 3 years, I was alongside my university trying to get into the space. And then in 2020, I was hired by Maven 11, which is a venture fund from Amsterdam, probably one of the leading names right now in the VC space. When I joined that, it was very small. Like we are managing only like $15 million, right? Which is absolutely nothing. I was the second or third employee. And shortly after I joined, we made an investment in Maple Finance. So yes, the big Maple that we know from today was actually also very big at that time, right? Like I was assigned to run the credit arm of Maven 11 because we wanted to show that we are not only an VC that gives checks, but actually get truly involved in the protocol, which is why today Maven arguably has a pretty good brand. So we started the role of being the pool delegate on Maple. So we are having multiple pools there with different base assets, and we are lending funds of people that deposited to that pools to market makers or to trading shops more broadly. And, like everything was going fine, like the deposits were skyrocketing. We were issuing $40 million loans, maybe not on a daily, but our biggest loan was to Wintermute, $40 million. But all of the great names were there, flow traders, and so on, and so on, and so on. And the problem was always there because all of these players, or large majority, they could only self-report their financials. So they were sending you on a monthly basis a PDF or a spreadsheet where they would claim that this is my balance sheet. Do you want to lend to me or not? So there was mainly the reputational game there that, Wintermute is great. Their balance sheet looks also good. They have audited financials once a year with a year lag, right? So you can blow up 10 times in the meantime. And unfortunately, this whole structure, and Maple was $2 billion protocol at the time, right? And these were all unsecured loans. So right now they are counting the TVL as collateral, which is a multiple of what the real loans are. So they had $2 billion in pure loans. So arguably, I don't know the real numbers, don't want to overstate or understate here, but they were similar size of a protocol back then. 2022 came, and the rodeo, as some of you, or maybe majority of you remember, Luna, 3AC, everything that we are in the middle of this shit show, basically, right? Like, Luna happens, you call to your whole portfolio and ask, how are you doing? And you have zero means to verify if these guys are exposed to Luna, what's their balance sheet looking like today. They can only hop on a call and tell you, we are fine, don't worry. And we still see that behavior today. Bybit happens, Etina sends you a tweet. Our exposure is minimal. You don't need to worry about it. So the same behavior is still today. But sorry, I'm taking a long time. Then 2022 came, FTX happened, and we started to experience the first blow up in our portfolio. So orthogonal trading, the launching partner of Maple, they were like one of the very first borrowers on the platform. They also had a pool delegate arm called Orthogonal Credit. They were falsifying their financial statements for many, many months. Maybe they never actually had the money. They were for sure not market neutral, which Kroll proved after a year or two. They are taking a very long time with these things. And we needed to call, or I needed to call our LPs in the middle of the night and tell them, guys, sorry, you lost $36 million. We didn't have any means to verify nor monitor that these guys were telling the truth. In fact, this amazing guy was so funny on Token 2049 Singapore and eating a nice lunch with me. And this basically was lying into my eyes this whole time. And he didn't have the money already at that time, So I took it very personally, and I told myself that if I ever gonna put face in front of these people and to the new ones that will think credit, it's a great idea to dip your toes in crypto, like we need to have something fundamentally different, right? But I truly mean it. Otherwise, I need to switch the lanes and go somewhere else. So it was a huge crisis, horrible time, and I was lucky enough to be introduced to Ioan, who was running his own startup at the time. And this was the moment that we need to join forces. Maven 11 supported us from the get-go. And this is where we are today. So maybe, Ioan, you would like to share your part of the story.
And my part is a bit more boring. So I've been in traditional finance for quite a long time, in high-frequency trading from 2005, then worked on financial products. And around 2021, I started working on some startup that was trying to solve the off-chain data verifiability problem, but a generic problem, let's say, with a generic approach. And when I met Wojtek, we actually found a problem that needs to be solved and applies very well the tech that I've been working on. So let's say that I was having a solution and I was not having a problem, and together we found a problem with a solution.
I think what you framed up with your story, Wojtek, is, obviously doesn't just exist in crypto. It exists everywhere. And we have this massive trust me, bro situation that's backed by these relationships. Like you said, oh, guy took me out to dinner, was nice, told jokes. That doesn't mean you have anything on your balance sheet. You know, that just means you're maybe an excellent front man at your job, and you're great to be put in front of people, right? As a mouthpiece. So, okay, with that, let's get into the problem a little bit more. So you kind of defined the problem back then. It still exists, but what does the problem look like in today's DeFi industry? And what are the main solutions people are using right now?
Yeah, so it's not great. Basically, almost nothing changed from the times I were describing. Only the model changed. So back in the days, we were actually truthful. This is unsecured lending or under-collateralized lending, right? Like you trust the counterparty. Somebody is supposed to do a DD. As you saw, we try to do DD, but if you rely on trust me bro document, right, you can do whatever DD you want, but you're still relying on somebody telling you the truth or not. What changed is that we stopped calling it unsecured lending. Unsecured lending, people claim it's dead. I see it differently. All of these yield-bearing stablecoins, right, they are wrapping their off-chain activity and in an on-chain token, and they give you that token for your hard-earned money. And they tell you, we gonna run some strategy, this strategy is gonna make performance, and we gonna give you a piece of that performance or large majority. But how is that different than unsecured lending? You know, I can also mint a token, give it to you, and tell you that, oh yeah, give me some money, let's open a business, and let's go. So the model just changed, and it's actually so annoying. We call it yield-bearing stablecoins. What's stable about it, right? Like it's a tokenized hedge fund that promises you that they're gonna isolate some specific strategy, they're gonna run it on your behalf, but that's nothing more than unsecured lending. And the semantics changed, but the idea is exactly the same. Also, all of these exchanges, right? Like after FTX happened, everybody rushed to have so-called proof of reserves. There is nothing proven there in reality, and that's what we also gonna try to change, first with OKX that invested in us. But the proof of reserves for exchanges, broadly speaking, is that they claim that they have a pool of money. Let's say Binance says we have 100 billion, and then they give you an ability to check via Miracle trees, all of the cryptography, blah, 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 blah. Yes, you are part of this 100 billion that we claim we do, right? Like it's a joke. It's basically, you know, patching things just to tick the box, something changed, but nothing changed in reality. So the status is that not many things has changed. Of course, we see a big waterfall of protocols of parties that are coming to us, for example, and want to get this transparency because it's being demanded by the market. With regards to other solutions, because you also asked for that. So proof of reserves concept existed already before. Oracles like Chainlink or REDSTONE, which, fun fact, we are working very closely right now, exist. But oracles are very simplistic. No offense, right? Like they are specialized in different things. Oracle can come, and if you give them a BitGo, let's say, or Binance API key, obviously not privacy preserving, they can take that key and see, okay, you have 100 BTC on this Binance account, and you minted 99 wrapped version of a BTC on chain. You are over collateralized. But if you talk about all of these structures that are 20 exchanges at the same time, running delta neutral strategies, doing OTC transactions like NEUTRL that you need to add a custom reconciliation process on top, parse the documents, verify the signatures, like, you know, it's not it's not the same game basically. So that's why both REDSTONE and Chainlink are today in large majority utilizing us for the proof of reserves, or as we call it, proof of solvency, because actually you want to prove that somebody is solvent, not that they have the money. That's another part that we'll talk about later. And they are putting this data on chain. So they come in when our job is done, they take the endpoint and they start pushing it on chain. Yes, this yield-bearing stablecoin is over collateralized. So when it's used as a collateral on Morpho or Euler, it's not like Etina hard-coded one-to-one and the whole DeFi space depends on this hard coding. You can actually peg it to the real over-collateralization ratio that people can trust. There are, of course, auditors, right? But auditors are not real time, actually quite the opposite. You need to spend a year to sometimes reconcile all of the numbers. And as said earlier, you can blow up 10 times in the meantime and nobody would know about it. So there is a very limited amount of things that people can do, which of course is good for us. And especially if you talk about hedge funds, this needs to be fully bulletproof, privacy preserving. No market maker, no trading shop that respects themselves and their size and their strategies would ever share a piece of information to a third party if that information is not protected, right? So that's why we designed the system, because that was always the problem at Maple, because we are asking, can you give us more information? It's not like we're, okay, you send us a spreadsheet and we are fine with it. But the argument was that if I'm called flow traders, I cannot share with you my Binance API read-only key, because behind those keys, there is the truth. Why am I called flow traders? Why am I worth billions and you are worth nothing, right? This is this tiny detail that is behind those keys that makes all the difference. So the whole architecture of our platform was with that in mind, that these people, this needs to pass their security checks because they will never use it. And people don't understand it. They think like, oh yeah, I'm just going to put in some zkTLS here and see what happens. These guys will never use it. Like, you can forget about it. And that's what we want to show today. What's under the hood of this whole protocol? It wasn't built in one day. Ioan was building it since 2021. We only defined how it should be positioned to the market and to who, but it's literally a whole architecture behind it. You only see the tip of the iceberg with all of those dashboards. This is super oversimplified what these guys are actually running locally. So, sorry, another big rant.
I think you're calling out a number of the challenges that have evolved over the years for us as, DeFi on-chain users. It starts with the nature of DeFi is that it's all verifiable on-chain, but how many people can open up Etherscan and understand every detail? And so what happened over time is we saw the growth of reporting tools. Those tools, though, in many instances can be flawed. There can be self-reporting that goes on. There's front ends that are put up where it's just someone literally updating numbers. There's no tie to any real smart contracts. I mean, in other words, it leaves us open to fraud being able to happen. And so I think this is a good lead-in to what you guys are building. Anyways, talk us through the elevator pitch for Accountable. The MANTLE Global Hackathon is a 3-month competition inviting developers and founders to design and deploy scalable Web3 and RWA products on MANTLE's modular Ethereum L2, built for high performance, low fees, and full EVM compatibility. With $150,000 in prizes and a $30,000 grand prize, now is the time to build. Register by December 31st, 2025. Submissions are due by January 15th, 2026. To learn more, go to mantle.to/hackathon/U4U, and don't forget to follow mantle_official on X.
Katana is an opinionated blockchain. Its opinion is that for DeFi adoption, there are 2 key things we need: deep liquidity and high yield.
To learn more, go to katana.network. DECIBEL is the new sound of trading, a fully on-chain trading engine supporting spot markets, perps, and yield to trade global markets. Enjoy trustless execution and sub-penny transaction fees. Join the future of trading at decibel.trade and access the Decibel testnet today.
So Accountable is a standard in real-time financial verification for both assets and liabilities that can be proved privately. And of course, we are targeting mainly institutions here because it's for sophisticated actors, let's say, to prove their balance sheet, to prove their strategies, but at the same time retain their IP fully with them. And this is the prerequisite basically for any reporting tool that will matter. You cannot expect that a bank will or a trading shop will maybe leak their strategy somewhere and the whole world could know about it. So that's the baseline of what we do. We let institutions to prove what they are doing off-chain and on-chain in real time and preserving their secret sauce.
Okay, I want to kick this over to Ioan because, before we get on here, Wojtek was pumping your tires and saying you're probably one of 10 people in the world that can solve some of the math-based problems behind this tech stack. So this obviously involves ZK, and I always want to give guests the opportunity to just explain what ZK is at a high level, if as much as possible, and maybe use an example. Just how is this privacy-preserving tech, and how does it work in practice?
I think ZK is a pretty well-known, and people kind of know what it does. But in briefly, it allows you to prove something without revealing that something. So you prove something about some things without revealing them. The sample would be actually what we do. It's a pretty good sample, and I think it can be understood by everyone. So we generate provable data aggregations that can be proven with the hashes of data alone. Sounds techy, but in fact, it's we generate proofs of their assets and of their liabilities, and we sum them up in a way that allows the software to verify that they are included in those totals. And we are able to verify the data acquisition process separately. This is important actually because the ZK is just as good as the inputs that enter the ZK. You might have some private inputs there and you prove something about those private inputs, but how much you trust them. And this is the reason why we treat verifiability as a spectrum, and we work with a lot of kinds of input sources. So we can work with signed documents, as Wojtek said. We can work with API calls. We can work with SVTP processes, SwiftMT, CeFi exchanges, blockchains, zkTLS, secure enclaves, and we support 4 types of secure enclaves. So all of these materialize in some proofs about how you got the data. And after that, you transform the data and you build a provable aggregation on top that then can be trusted by another party when they verify the totals. It's maybe a bit more to say here about how we build those aggregations and how we try to cover not only the assets, but also the liabilities part. Because Wojtek brought it at some point, you don't have to prove just that you have the money. You also have to prove that you do not have liability, you don't have other loans, and it's your money. And the way we do it is by creating a network in which our nodes communicate. Obviously, it's a private permission network where nothing leaves your infrastructure unless you allow it to leave. And all these checks are happening in a ZK fashion, meaning that no underlying information is revealed. And our way to reveal hidden liabilities is to check the loans or the liabilities that certain parties know about in a report that people generate. So as our network will grow and as more lambdas will join our platform, we actually also create this space where they can together create, let's say, not just take information, but also put information without revealing the underlying rates or underlying loan sizes, and together benefit from that information. So not being able to misrepresent your financial situation.
So the network is here to, give you an ability to communicate with other people because you can share information privately that has been already proven. So let's say a borrower wants to prove something to the lender. Like back in the days, we would like to receive from the borrower information, let's say from Wintermute. But Wintermute, you're not going to share you like real-time information that they have money at multiple venues, exchanges, broker accounts, whatever. They cannot get that leaked to any other party. Only we should be able to see it. So that's why the network, it's used to pass this information, push it to the parties that deserve to see it in a privacy-preserving way. But the network is also there not to only take from it, not to only take the information out of it. It's also to contribute to it. So optionally, people can also, in a ZK way, as Jan said, so without revealing I lent to Wintermute $10 million at 10% rate, this liability for Wintermute gets created. And then if Wintermute goes to another lender and tells them, I have zero liabilities, they will be revealed as a person not that has a 10 million liability, but that a person that is misrepresenting their side of liabilities. So then the nodes of the lenders in an automated ZK fashion will say, what's up? Like, we know the liability was recorded. Wintermute is not showing you the truth without revealing what the truth is. So the power of the network comes when there is a lot of counterparties there. That's why we're trying to onboard as many as possible, because it's also for their own benefit. They will be able to see more. The ability for malicious partners to get away with something that is not on the network diminishes over time. So the liars gets exposed much faster, and they probably wouldn't even participate in such system because it's basically working against them. Every single party that we onboard, it's another check for any other party that they work with, and that is also on the network. So that's the background here.
We have always operated under the assumption that everything should be transparent. When we're using DeFi, that's the power of understanding. If you're in a DeFi money market, where does the yield come from? Where is everyone's money pooled? It's simple, and it's an improvement upon the opaqueness of what we've seen in legacy finance. But there's also been a shortcoming to that, which is that we have no ability to run a strategy without our competitors, revealing that strategy or uncovering that strategy. And that's just not the way that traditional finance has worked. And I've long wondered, when would DeFi be able to allow for that sort of privacy or that sort of competition to play out? This is a part of it. We need the verification to understand, again, is a yield real? Does an exchange have the reserves that it claims to have? Is a stable coin fully backed in terms of its collateral? But we don't have to reveal all the private details between lenders. We don't have to reveal a proprietary trading strategy. That's why a lot of these protocols have stood up a protocol around certain trading strategies, because the idea is that it can scale, and then the distribution and the ownership in that network and that strategy is what would ultimately be valuable. This is a major missing puzzle piece that we've all been looking to for some time. Why don't we talk, though, about how does this play into traditional finance? We're talking about all the possibilities here with accountable and DeFi. How do you see accountable working with traditional finance?
I think traditional finance, it's different in a sense that you cannot go absolutely everywhere with this money, right? Like, if you want to know that flow traders or whoever is trading on, interactive brokers, I'm just giving a random name, then interactive brokers is the source of truth, right? Like, you can ask, what is the account of flow traders? The auditor comes in. They have full visibility. It's not like you can take money from interactive brokers and then go to another platform and, do basically constant deposits, withdrawals, go to DeFi, go to Aave, borrow against it. These are all centralized places, effectively, right? And the problem became very apparent when DeFi was starting. Everything was on chain, right? Like the playground was there. So there is not that much to verify. Like, it's an open book in the end. Of course, you can hide the wallets that you don't want to reveal the strategy and so on and so on. But when we were starting to wrap off-chain activity into on-chain tokens, and the only DeFi component of it is that you get the token on-chain and the rest lives off-chain, then this became a very valid point. So where we see it going forward, right? Like, I think people will have their digital identity, and they also need to have their financial identity. So we are not limited with our verification to Binance and Fireblocks, and that's it. Actually, quite the opposite. You can prove your statement at your local bank account. And we have these type of instances. You can prove the treasuries that you're buying on interactive brokers. You can prove your allocation to Fasanara private credit fund. So this all can be your information still. You prove it yourself, and this gets attached to your identity effectively. And if you come to a bank one day and they will ask you, why should they lend to you? Why should they give you a mortgage? You're going to give them the proof that this is my net worth across all of these different places. No matter if this is TradFi, DeFi, or CeFi, this is the financial package that I have. And you can check that I'm creditworthy not only once and then see what happens, but you can constantly run those checks. And these checks do not need to reveal that, you bought Shiba Inu on Binance. They, for example, only care about your dollar value of all of your positions and whether you can afford to repay it, or cash flows or anything like that. So I don't know, maybe Ioan, you have some idea how we could skip the whole DeFi part and use this tech purely for the TradFi infrastructure, but we are moving to a direction where there is a mix. And when you have a mix, you need to connect all of the dots, right? So this is where this system that we have is scalable.
This is exactly what I wanted to say. So we are not, using us in the TradFi scenario is not really, doesn't help in any way. But when there is a mix, it's actually where this becomes powerful. And related to the old world, I think we are innovating on the audit on the old world. That's important. Not necessarily the TradFi, but we see the classical audits that happens once a year as still needed and very much needed because, there is no other way to do a consist or deep due diligence. But there should be some kind of light audit where auditors just check that you own the accounts that you're claiming that you own and that there are no other liabilities, and in between, a system like ours can generate live proofs. So there is some, let's say, improvement on the old world in that sense, that we enable some kind of gradual different clocks, a low-speed clock for classical audits, and then real-time clock for cryptographic proofs.
That's a good angle, right? Because like in TradFi, right, like people still rely on this report once a month, once a quarter, and so on. And it's still needed, right? But we can be this party real time. A trusted third party like auditor comes in every week, 2 weeks, 3 weeks. They don't do the audit. They trust the software, right? They trust the math, they trust cryptography. They only make sure all of the accounts are properly connected to that software. And if there is liability, and don't get me wrong, if I'm going to give you a loan on a napkin right now, sorry to say, no tech, including ours, can solve for it. But these guys can. They can add manually this type of liability to the whole equation. And then you have the full chain of trust. You have something real time. You have something, periodic that is attesting that, yes, this real time is working correctly. And then you wrap it up with a full audit. And whatever the data is, it can be purely TradFi data. This is a major improvement to the system that we have today, because the credit ratings do not need to be once a year. Maybe they can be not every tick, I'm saying, on the market, but it would be nice to incorporate the live data into things that are happening. So I think this is the angle, that if we would kill the DeFi part and so on, this would be still valuable even for the TradFi folks to move to something real-time on the auditing side.
Just to sort of put a bow on this conversation we've been having. So, we've been talking about the old world, the new world. So old world being legacy TradFi, new world on-chain, DeFi. It's so clear and obvious that these are colliding. I mean, that shouldn't be even up for debate anymore. I was just looking at Larry Fink. He wrote another multi-page spread in The Economist talking about tokenization. He's been banging the drum for well over a year that tokenization is the next biggest thing, tokenization and RWAs. So clearly, real world assets are coming on chain. And like we've been talking about, there has to be a way to document them. An example you gave earlier is still kind of ringing in my ears when you said at one point, like, I can't remember who it was, but they would audit once a year and there was a 1 year lag, like that old standard. I mean, I'm sure that still exists in places, and it's it's awful. So if there's a way to get to real-time proving with accountable, I can easily see it becoming a standard. Like I don't know for sure if it's going to be you that cracks it, but it's needed regardless. I want to take this opportunity to kind of get a little bit more into the products. We've been talking a lot about accountable, but what are some of these products? So the first one that stands out when we go to the website is this DVN, Data Verification Network. Maybe tell us just a little bit more about that.
I'll go to a brief description and then maybe Wojtek picks up and continues from there because so at the base level we have the data verification network, which was mentioned before, but is very important that it runs on premises to various parties. So we do not see the data, we do not see their API keys, we do not see anything. They prove the data themselves. And how we do that is by deploying a lot of cryptographic primitives with the purpose of attesting to the highest level possible the data acquisition and then building the trusted aggregations on top. And in order to do that, we build our own connectors to a lot of venues. And those venues are, again, banks, CeFi, TradFi, ONCHAIN, literally anything that moves, document signing, and so on. We build the connectors and we trust our connectors. And then we put those in secure enclaves. And we use NEUTRL if in AWS, SEV if in Google Cloud, SGX, so doesn't matter. We adapt to their infrastructure. The purpose being that we do not want them to be able to crack our code and reverse engineer the code or to do man-in-the-middle attacks. Then we use other techniques like certificate pinning in the secure enclaves or zk-TLS to make sure that the API data retrieval cannot be faked. And the end goal is to get to signed APIs. We believe that the whole world will move towards that. I see zk-TLS as an intermediary hack to solve in a convoluted way a problem that can be solved easily by the data source by providing some hashes and signatures. We have our own ZK-friendly solution, but if not, there is an RFC with HTTP message signatures or C2PA, which is a future ISO standard. So there are methods to prove and extend in a way the verifiability of the data beyond the live session that you have in the browser or beyond the HTTP session. So you get the data and you are able to do a transformation and still prove that I did a transformation, that transformation was X, and I did it on data Y that comes from a certain source.
Maybe I can add my color to it. So you should imagine that the user, right, the client of accountable, let's call it known or whoever, is running our software in their local infrastructure. They have one dedicated machine for this purpose, can be rented in private cloud. They install the software themselves because this is the extreme, right? If you are a trading shop, you don't want anybody in your even infrastructure. What about sharing API keys with somebody, right? We sometimes don't install the software ourselves. The teams, the DevOps is installing it themselves because they need to make sure that nobody is stepping on their turf. So the software is on that machine, right? Ioan mentioned all of the cryptographic techniques that the software is using. And base case scenario, we are creating connectors. I use this analogy that connector is like a pipe. That pipe goes from this machine that we run locally directly to Binance, right? And we are generating proofs that this data that is retrieved from Binance, it's real and that it wasn't tampered with anything in the process. It arrives to your machine. It's fully yours. Nobody else can see it. Accountable cannot see it. Accountable doesn't store it. It's fully yours, but it arrives to your machine with all of those proofs that it was acquired and it wasn't altered in the process. And now you have a possibility to create reporting out of it because we take absolutely everything. You take leverage level, liquidation levels, all of the positions, everything that moves at those venues, it's retrieved by the software. But then you are the full owner of it. And you can say to this lender, I just want to say that my exposure to Bybit at the time of Bybit hack, it's 10% of all of the assets that I own across all of the exchanges, all of the custodians. And this is the power that we give to user because you need to have the data as the owner. We are doing the transformations. We are doing the proofs. You can generate reports. I'm market neutral or whatever that is. And then you will not talk with the data. And the next slide will show you how we do it, and Ioan will continue.
Yeah, I mean, here what we enable is people to share the data, and we have multiple ways of sharing. One is peer-to-peer, when they take any data from the internal repository, like they have. So, for example, we go as DEFI'S computing, large varied risk models. You can share this risk measure with somebody in your network. Or you can have dashboards that are private, permissioned, meaning that you show to your LPs something about your financial health, which can be more than just your over-collateralized, or I don't know, more than where you have the money. It could be also the actual strategies, or going deeper on how you use the money. And other types of sharing are the public dashboards that we do for stablecoins. I'm sure that people know what they do. So it's showing that stablecoins are over-collateralized, that they are delta neutral, or where they keep their money and how they deploy the money. So in this private permission network, it's this sharing that we do. You can have it with an auditor, with credit rating agencies that generate live credit scores out of it, and so on. But the most important part of this network is the liabilities discovery. So this is the reason why we actually wanted to create the network. Having peer-to-peer communication, yes, it's great, but actually revealing hidden liabilities is something that is not currently doable.
And that's also the big difference between us and the oracles, right? Like, oracles keep the information isolated. So they tell you, yes, they are over-collateralized. That's it. But you cannot take that information, repackage it into something completely different, and talk to another party that wants to hear completely different thing, right? It's not an information that can move, be incorporated everywhere. So oracles, give me your keys and I will tell you that you have the money, you have the dashboard, tick box, yes, you have the money. But if you want to talk, if you want to create a language out of this data that it's first proven, you have the network for it. There is no other way around it. And we are lucky maybe that, as you said earlier, somebody needs to do it. So our network seems to be the most complete on the planet on that front. But this is how you win the business. You need to create the rails that the information that people trust can flow. And that's the reason why we have the network.
As a DeFi investor, I turn to Maple for permissionless institutional quality yield in a single liquid asset backed by over-collateralized loans. Maple's SYRUPUSDC and SYRUPUSDT are now supported as collateral for enhanced yields on major DeFi liquidity hubs such as Pendle, Fluid, Camino, Jupiter, Morpho, and Aave. To learn more about Maple, go to maple.finance. River is building a chain abstraction stablecoin system that connects assets, liquidity, and yield across multiple chains. Season 3 is live. Earn River points by using SAT-USD in DeFi such as Pendle, PancakeSwap, and Uniswap. Stake River points to accumulate more or convert points to River tokens whenever you like. To learn more, go to river.inc. Hey folks, I want to tell you about our sponsor Gearbox, the protocol that reimagines on-chain lending. With Gearbox, you can access 10x credit across DeFi or lend for passive yields with single asset deposits and no impermanent loss. Users can access leverage to margin trade, stake, farm, and more. To learn more about Gearbox, go to gearbox.fi. Puffer Institutional delivers secure, high-yield Ethereum staking built for institutions. With battle-tested security, granular access controls, and the ability to boost APY by securing multiple AVSs, Puffer gives institutions full control and optimized returns. Puffer is also behind the Unify-based rollup, aiming to transform Ethereum's future in a world where all L2s are working together. To learn more, go to institutional.puffer.fi. Guys, can we talk about two examples that have been top of mind for us with Proof of Solvency? One team we know really well, which is NEUTRL. NEUTRL runs a stablecoin strategy, which is based on OTC arbitrage trading. So long story short is that there is a lot happening under the hood there. There's exposure to centralized exchanges. These are all details that a potential on-chain investor, should consider and understand that this is a yield with real risk behind it. Perfect use case for the Proof of Solvency dashboard. Can you just talk us through at a high level, what information are you verifying on their behalf, and how is that helpful to us as potential depositors into NEUTRL?
So NEUTRL has been one of the most extensive integrations, exactly for the reason that you said, OTC transactions, right? Again, no offense, but an oracle wouldn't be able to analyze actual documents and generate an automated system that is constantly parsing those. You get one template and then this needs to go. There is nobody, looking with their own eyes that this document is basically every time different and I need to analyze, input it to the system. It needs to be an automated way. But let's start from the beginning, basically. So with parties like NEUTRL, the main part is that we want to prove their reserves, right? So we want to aggregate all of the money that they have at all of the different venues to be able to state that the minted supply of, in their case, NUSD, it's lower than the money that they have. That's the most important question, right? Like, are they over-collateralized? Because if not, then it's probably not a good place to be. So as you see, they are sitting comfortably at 104%. To be honest, with many parties, they are running on much thinner margins, especially if the strategies are relatively low risk. They are not using any leverage. It can be like 100.1%, right? And that's completely fine. You want to be at 100 or above. Some people use bigger buffers because their spreads are, changing. They need some insurance fund and so on and so on and so on. So now we are moving to the reserves and the actual breakdown. So this is what NEUTRL wanted to show. We are a neutral technology provider, right? So it's not like we are telling NEUTRL, okay, guys, you need to prove your liquidation level on Binance. That's not how it works. It's what you guys, what LPs, what everybody is comfortable with to be like, okay, this is enough for me to be able to allocate money to this protocol and I'm okay with it. And that's another case. So as we can see, there is Fireblocks on which there is 107 million and we are verifying directly from the source. We have, of course, the connector to Fireblocks that there is money there. In fact, NEUTRL could show you what exactly they have there, right? What are the assets, in what amounts, what are the breakdowns? They can show you historically how these breakdowns were changing. This is what the platform can do.
It's almost the market will decide for people like NEUTRL what they need to show. And they can show more than the market wants. They can show less than the market wants. But if they're showing less, the market might demand it from them. One other thing I think I'd like to show here too, if you can pull up Noon as well. We were talking a bit about them before we got on, and it's just wild the level of transparency they've been holding themselves to. And I don't want to say it's gone unnoticed, but looking at some of what they've been doing and what they've been showing from day one is really impressive. And it strikes me as a protocol that probably should be rewarded by the market more than it is right now with around 26 million in TVL. But yeah, pull it up and maybe just kind of walk through what they're doing as well.
Of course. So Noon is our first client, right? So they were always the party that wanted to show we are transparent and we will do whatever it takes to make it happen. And we use them also as this, maybe not experimental party, but usually they're the first ones when we implement new features. They are there to be like, let's go. If we can show more, let's just show more. From January, these guys are proving themselves. So in their case, the strategy actually is described more detailed here. So they're allocating capital to mainly Fasanara Private Credit Fund, the TradFi one. And effectively, Fasanara is issuing an NAV statement, basically every Monday, I believe. And we are generating the proofs that the NAV came from Fasanara and that the signatures on that NAV statement is real because we have the direct integration with DocuSign in that case, and we can generate that the origin of this document, it's not noon, under the table in their own PDF generator creating some document here. We can really attest that the document came from Fasanara, and the signature, it's really the person from Fasanara signing it. Of course, it would be great to go level deeper and verify what's inside of Fasanara, because there we are attesting effectively that, yes, Fasanara is saying the funds are there and we can validate that. But what happens with the funds later on, that's not something that we are part of. So that's a disclaimer here. Then there is Alpaca, which is basically treasuries, US brokerage account, and Ethereum, right? And this is the part that I think is going to change. So, you say you have money on Ethereum, but what does it mean actually, right? Like you can have money on Ethereum on Balancer in some weird stuff. So they have means to show you exactly to the point which protocol, where that is. And actually they are saying it here. So they have some pendle positions there, but they can prove to you exactly what they have out there. So this is very powerful chart. You want to see the track record. You want to see that everything is consistent, that they never went under during the last year. And again, you have the underlying proofs, even including ZKTLS. So that's why I'm saying none, it's always the first on something. ZKTLS, it's arguably a higher verifiability level attached to the data than pure connectors or connectors plus secure enclave. So none did absolutely everything. They got a credit rating, used the ZKTLS. This costs money, guys. Like, it's not for free, just, let's add it, right? Like, they are spending a lot of money on it. And not only that, I don't see it here, but they also insured their DeFi positions with Nexus Mutual, right? Like, so in terms of safety and everything that they're doing, they did absolutely everything.
So you've got this B2B layer, which is the verification network, which you're selling to other businesses and protocols, but there's kind of like an emerging B2C play here too. You're almost kind of vertically integrating yourself with this Vault as a service and then this Yield app. Maybe one of you can speak a bit more to that. And of course, Noon is involved in this as well, being kind of your guinea pig with everything, it seems like. But yeah, speak more to the Yield app side of things.
Yeah, so like we always wanted to create a place which is like a menu, right? So I feel like a lot of protocols have this tendency that either you follow their steps and either you follow their structure or you get lost. And we always felt that you need to give to people as many options as possible, and especially an ability to customize it the way they want it, such that you can create a deal. So back in the days on Maple, for example, there were some parties that were saying, if you're going to have a revolving credit facility, then we have such a deal. We just need to wrap it up fast. We'll have 100 million in liquidity coming any second. And of course, it's not like you can create a revolving credit facility on chain in a matter of couple of days. So we took an approach here that our protocol, like the on-chain part, is very modular. So we can create basically any type of structure that any type of institution or the counterparty that wants to run and adapt to it easily, relatively easy. And we always thought that we want to create a marketplace for verifiable yield opportunities, because right now it's a thing. I hope in the future it will be like with smart contracts. You don't say this is a marketplace for protocols with a smart contract audit, right? Like you assume everybody has it. But right now it's still like, wow, they have a verification. They are proving they have the money, right? Like, I hope this will become one day mandatory. And of course, I hope that will play a big role in this adoption. So the verification is the foundation of everything we do. If you have the verification, it's like a door that you can pass and you can explore and other things. And Vault as a service is this modular Vault infrastructure where you can customize your financial product, be it lending, open term, fixed term, KYC, accredited investors only, permissionless, collateral, no collateral. It's a menu, a bit like Conduit, right? You go to them and you say, I want a layer 2, or I want a layer 3, I want Celestia, I don't want Celestia, right? Like, you build your stack. Your financial product is a stack, mandatory to have the verification basically baked into that. And then you can be part of our marketplace, the yield up that is for verifiable yields only. You can also just use the verification. You can just use the vault infrastructure and use it as a white label solution. But then if you don't have verification, you can't be part of the yield up that is for verifiable yields only. In general, I want to stress that it's an extension of our business. It's to make the adoption of the verification faster, to give people not only the edge that I'm verified, but I can also create straight away a financial product that people can trust. And you can do it all in one place.
So guys, can you tell us more about what vaults are live?
Yeah, so we have first 2 vaults. We did like our soft launch, I would argue, because the majority of ammunition is coming a bit later. So the first vault that we launched ever, where history was made, was together with our partner MU Digital, which is Asian private credit, for which we are also releasing, of course, Proof of Solvency. There is no other way around it. And then we have the so-called Vault Strategist, which is SharpBite, which is one of the newest players in town, a yield fund. And that is basically allocating the capital from the vault in a transparent manner. Everybody can verify where this money is going among all of the opportunities that are useful for the MU Digital ecosystem. So they're gonna mint they minted the junior tranche of the protocol. They minted some proportion of the senior tranche. Their allocated capital to Curve to provide liquidity against Agora USD. So they can farm rewards. They can be your manager as an exposure to MU as a whole, doing different things and optimizing for the yield, but also for the strategic goals that MU wanted, right? Like you don't only want to mint the token and then have zero liquidity on Curve. You want to create an ecosystem. So SharpBite is this party to do it, and you can earn very nice, not only rewards, but also the base yield for it. The second vault launched today. I don't know when this recording will be released, but it's 3rd of December. It's for Known, right? So Known, as you said, is everywhere. Known also created a vault when on top of the typical like exposure to all of their strategies, that also will be running strategies on top, including leverage looping. So if you want to get the Known yield with some leverage on top, basically, and some other strategies that they have in mind, this is a place to go. We launched on Monad. In general, this is a menu, as I said, so people can choose. I would like to deploy my vault on Arbitrum, on Berachain, or whatever that will be. But this is just like the starter. These are permissionless vaults, more DeFi native flavor, let's call it this way. We are onboarding several really like tier 1 financial institutions where we will try to rebuild the old model of what I was doing, for example, at Maple, right? Like lending to tier 1 people, but this time not only self-reporting that they are great guys, but also utilizing this network to prove to LPs that you can trust me with your money. I'm doing a good job here.
How does a team get in touch with you guys? How do they get started with Accountable? What's the process that's needed to be done?
So how to get in touch? Like you can DM on Twitter, me, Ioan, our Twitter profile, Accountable Data. Actually, the cool ones were already taken, so Accountable Data was the best that we could get. There's multiple ways on the website itself, accountable.capital. I see the lack of consistency in naming, but sorry, we are focusing on the tech. There are a lot of type forms that you can fill in that you would like to join the data verification network, or of course the vaults as well. This is the best way. Or you will for sure find somebody that knows us, so we can also go through the word of mouth. Then in terms of the installation, right? Because like people think like, okay, how do I install such software, right? It's probably relatively heavy to do it. And then I said before, like, you basically need to give us one machine dedicated in your infrastructure. No crazy specs, actually low specs. We install the software for you if you don't want to do it yourself, or one DevOps engineer, junior engineer guy, 1 hour to 2 hours max with our to-do step by step. So it's basically just let us install the software if you want to do it very fast. you cut our access from that moment. You connect all of the accounts. We build for you the dashboard simultaneously if you want that, if you want some sort of public dashboard. And we had onboardings like with Unitas, for example, that end-to-end 24 hours. For somebody like Galaxy, where we were tokenizing a CLO strategy, that of course took much longer because Ioan was first grilled by all of the security guys there for 10 people on one for weeks sometimes. So it's a spectrum, but I would say majority of onboardings, especially those yield-bearing stablecoins that are not absolute top of the top market makers or tier 1 financial institutions, it's literally 2 to 3 days. And the work is mainly on our side to make sure that the numbers are correct, that the reconciliation is there, and to build for you a very good looking dashboard, of course, with the designs that you want to follow. We just execute the orders basically. So it's not a big deal. On the vault side of things, first you need to be verified if you want to be part of the platform, of course, but then, we just do some KYC, KYB on the vault manager. Of course, we can be also selective, right? Like, in the end, people will always blame us that somebody blew up on our platform, even though, for context, we are not running any strategies. We are a neutral infrastructure provider. We give you smart contracts, we give you verification, but we are not a party here. But still, I remember at Maple days that people blamed Maple for the blow up in our pool, right? That orthogonal trading went down. That was mainly on Maple, like on us, of course, as well, but on Maple mainly, even though Maple was an infrastructure, right? So that's why we need to be selective, and then you can deploy your set of smart contracts, curate the vault completely, the way you want it. We add the verification to it, and you have a financial product live in a matter of, you know how it is with legals and everything. It's going to take a couple of days, but that's basically it.
One other question. How does Accountable make money?
So the verification, it's SaaS-like business model. So we basically charge people based on number of data sources. So we have several packages, and that involved integration with an Oracle like Chainlink or Redstone, the dashboard. We now don't probably go through the whole pricing here, but basically a data source is Binance. Binance with 50 sub-accounts is still one data source. Ethereum as a chain with 5 DeFi protocols on it, it's one data source. So we operate like that. This is the model for the verification. There's no onboarding fees. You basically pay monthly subscription. We want to have as many users as possible, so don't be shy. The pricing is actually, I would argue, I know everybody could say that, but it's very, very reasonable because we only care about getting you guys on the network such that you all can experience better data and live and sleep better at night. So these prices will change also at one point. Don't get me wrong. Then on the vault side of business, we are flexible. One size doesn't fit all, right? So if somebody's margin it's 0.1%, I cannot say that I'm gonna charge 1% from that structure. So effectively, you have different type of fees. There are performance fees, management fees, establishment fees. And depending on what the vault manager wants to charge, we try to be like some smaller, of course, proportion of the whole fee structure that they are making. So we want to have the upside in the vault, and then the verification for the vault is free. So, you as a protocol, you're going to pay for proof of solvency. But if you want to show that you're running a strategy via our vault and that the money is there, that's included in the package, basically.
Guys, I think this is probably a great place for us to start to wrap up. So first, I want to remind our listeners they can learn more about Accountable by going to accountable.capital. They can follow Accountable Data on Twitter. You can also follow Wojtek's personal handle. It's VVOJTEK_P, and we'll put that into the show notes so you can easily find that. Ioan, Wojtek, thank you so much for coming on. I want to give you the final word before we go.
It's a pleasure to be here. That's, I think, pretty obvious, but for us, it's very important to understand what we do, right? Because you see all of these dashboards, and we want you to understand that we are a humble servant. We provide technology for people that you guys can trust. But what you see on those dashboards, like, it's really up to you to tell your favorite DeFi protocol that you want to see more. They have all the means to do it. They're not gonna reveal their strategies. Their IP is protected. So let's raise this bar collectively for this industry so that we're more transparent, we have less defaults, and we feel safer here. And let's make transparency, verification, another must-have like smart contract audits are, right? Like, it's for your own good. And of course, we provide the service, so we have interest in it, but I think nobody can deny that it's a net benefit for all of us here. So it's us or somebody else, but somebody needs to change it. So let's start the change today.
Thanks everyone for tuning in. To stay up to date with future episodes, plus get expert tips, strategies, and exclusive content, subscribe to our free newsletter at the-edge.xyz.